this information for June came out the first couple of days of July. So you're going to expect July information coming out around the 2nd of August. You can go to the Realtors Association of Edmonton and pull out the monthly market information. That is a great website to go to for all sorts of information. And so we're going to talk about what happened in the most current information we have, which is June. A quick update is basically that everything is kind of down mildly. You can see that I've got decrease, dropped. We had a tremendous spring of 2022. And then as interest rates started to go up, the market started to slow down a little bit. They kind of bottomed out in November, December. And then we've had this steady growth basically since January. But in June, things kind of cooled off a little bit. This is a quote from Melanie Bowles, who is the chairperson of Ray. And she basically talked about how June, sometimes it doesn't, and sometimes it does, where we start to get into a little bit of summer slowdown. So that's about what we sort of saw a little bit. As they said, we did see some decreasing numbers, but you're also going to see in a couple of slides on the home price index that the home price index for typical properties in Edmonton actually creeped up a little bit. Interestingly as well, we saw a bit of an uptick on things like townhomes, apartment style condos, things like that. I believe that is because of the high interest rates, that some people that can no longer afford detached single family homes or duplexes are starting to turn their attention towards some of those lesser priced pieces of property. This is the home price index. I love this tool that we have available. If you've never seen it before, reach out to your Mogul agent and ask to have a little bit of tour of the home price index. This is the 1 year Edmonton and Greater Edmonton home price index, which basically is the composite of everything available: detached, duplex, townhomes, apartment style condos. And so you can see that it's been like the bottom part of a roller coaster. You can see where we were still quite high in June of last year. Then things started to bottom out in the fall. And now we have this slow, steady growth. A lot of people do ask me, so I will again say that the difference between where we were in June last year and where we are this year, we're down about 8 to 9%, both for the city of Edmonton and Greater Edmonton area. So where are we at? Obviously, inflation is a big conversation. Inflation in June hit 2.8%. So on the surface, that sounds like some really good news, because the Bank of Canada's target inflation rate is 2%. So it seems like we're almost there. However, that, as also hopefully everybody is aware of, is because energy prices have dropped so much. When you take energy out, we are still floating around 4%. And therein is the I guess you could basically say confusion for a lot of the general public in regards to why they're seeing inflation come down to almost the target rate of 2%. And yet we're still talking about another potential interest rate hike in September. It's because pretty much everything else is still costing a lot. As it says here, if you take out energy, we're still at 4%. That is still down a little bit from May. Food is still very expensive. Alberta inflation is down to 1.9%. In May, it was 3.1. But if you take gas out, Alberta inflation 3.3%. And if you missed it, the next Bank of Canada interest rate hike or interest rate decision is September 6th. There we are. So monthly inflation graph, again, you can see how high up inflation went during COVID after COVID. It peaked out in June of last year. And now we are almost down to where we are, but not quite. And again, that's the discussion that we're going to have, or the Bank of Canada is going to have over the next 6 weeks, as to whether or not to raise interest rates again. How is this affecting Canadians? So it's interesting, as I was pulling up a bunch of information for this presentation, the dialogue is a little different. Pretty much since interest rates were on the rise last year, it was just a lot of general confusion about like what's happening and how does this affect me, especially when it comes to the real estate world. But what I'm seeing and reading about now is that the interest rates, and that is something lagging. You see an interest rate increase and you don't really feel it or see the effects for quite some time, sometimes almost up to 2 years. And now you're starting to feel and read the effects of what's happening with these interest rates hikes. Everything is more expensive, and people are starting to talk about that a lot more. First off, unemployment is down to 5.4%. Wage growth has cooled. Gas prices obviously are down significantly, 30% from June. That's again why inflation has come down as much as it has. Mortgage payments are up 30%. Food prices are up 9.1%, very significant. And right now, consumer debt is sitting at 2.9 trillion in Canada. So this was a very recent Angus Reid poll about how Canadians are feeling about rising interest rates and inflation. 34% of Canadians expect significant challenges ahead. 59% say hikes have negatively impacted personal finances. 42% of low-income earners are feeling that it's going to have a severely negative effect. And 45% of renters say that it's going to be tough to pay rent. Is there going to be a September rate increase? We ultimately will never know until it happens. Again, that's September 6th. The Bank of Canada is watching closely. Again, understanding that it's primarily due to energy prices dropping that's caused or inflation to drop down. They are looking for things like grocery, food, furniture, cars, all those types of things to start dropping. And they do look at, you can write these three things down or take a picture. You can do your own due diligence on what these mean, but there's three main indicators that the Bank of Canada looks at: CPI trim, CPI common, and CPI median. And they're monitoring all three of those to make a decision on whether or not they're going to move rates or not. So this was an interesting thing that I heard from an economist. Obviously, the concern about interest rates going up too fast, there is the possibility of a recession. So does the Bank of Canada, do they feel more comfortable with the Canadian economy being in a recession or an inflation? They will take a recession every day of the week because they have many, many tools to fight a recession. They only have one tool to fight inflation, and that's increasing interest rates. So we don't know if we're going to go there, but ultimately, again, if the Bank of Canada had their choice, they would rather see the Canadian economy fall into a recession because of all the tools they have to fight it. Okay, I started to talk about Calgary last month. I think it's important to still talk about Calgary this month. Calgary had 11% jump in values from last year. Calgary is basically on fire. They are doing extremely well. You can find all sorts of articles about how well that economy is doing down there, or sorry, how well that real estate market is doing. And they basically are attributing it to a strong job market and lots of people coming to Calgary, which is basically the two ingredients needed to have a very strong real estate market. This was some interesting information. The new housing price index. Calgary is the only city west of Quebec that has gone up. The number one new housing index was actually Quebec at 3.7%. Edmonton was the worst of all the major cities, but Calgary is doing quite well. I did find this was important to point out that even though Calgary is doing so well, Calgarians are also feeling the effects of high interest rates. And the article here talks about how one of the effects that's happening, because people are going to make sure they have a place to live, is that they adjust their food habits. Obviously, they try to cut back, but they also just change their habits. I remember years ago in a different industry, I was talking, and the last time we were in a pretty significant recession, and I was talking to the owner of a pretty high-end restaurant, and he said that if people are used to going out to eat at a restaurant, say 4 times a month, they don't necessarily stop going 4 times a month. If they used to go to Ruth's Chris 4 times a month, now they're going to the Sawmill. If they used to go to the Sawmill, now they're going to Moxie's. And if they are used to going to Moxie's, now they're going to McDonald's. And it was interesting in the fact that when I was talking to him about that, McDonald's had something like 2 years of negative growth. And then we hit this major recession, and McDonald's was killing it. They were so far up on stocks. And it just made me realize, yes, people don't necessarily change their habits, but they will change how they spend their time and how they spend their money. So in cases of, shopping for groceries and various things like that, maybe you're not buying Tide anymore. Maybe now you're buying the no-name brand. those types of things. But people are making adjustments to minimize their standard of living, but it is definitely having an effect. Okay, here we are. So the next 3 slides are basically just a reinforcement of the fact that people are still moving to Alberta. There's all sorts of articles about how many people are moving to Alberta. The articles here are pretty interesting in the fact that they're talking about we have the youngest population, and we also have well, first off, the reason why we're growing is we've got the largest natural growth in population. We have the largest amount of immigration coming here, and we have the largest amount of in-migration. So we're hitting the trifecta in regards to why people are moving here. The other parts of the article here in regards to basically just we've got the most amount of people under the age of 65. We've got the youngest population. We've had basically in this last slide here, if it'll advance, over 200,000 people have moved to Alberta basically in the last years. That's basically like 2 Red Deers moving to Alberta over the course of the past year. So it's interesting times because of the fact we've got all these interest rate concerns, and yet we have all these people moving here. The job prospects are strong, and I continue to hear about how people are moving here from Ontario and BC, because if they couldn't afford a $1.2 million home at 2%, they certainly can't afford a $1.2 million home at 6%. But they can come here and they can buy a pretty nice $450,000 house. And really, again, yes, the interest rates are not fun, but the bottom line is, can they afford the monthly payments? At the end of the day, it's whether or not they can afford the monthly payments. They would rather pay lower interest rates, but if they can afford the payments, they're going to buy that house. All right. Just some interesting things that I saw. Edmonton leads the number of homes listed below $200,000. So if you talk to your Mogul agents and you ask them to pull up the number of properties that are listed under 200,000, there's a lot in Edmonton. That's compared to something like I think it said basically there's 0.04% in Toronto. Like, it hardly exists in Toronto and other major markets. So it's still very affordable in Edmonton. Edmonton's real estate market offers value to the buyers. The biggest thing that I pulled from this is that we are the most affordable market in Canada. And then you look at the bottom here, the average median income in Edmonton for 2022 was $134,000 compared to $106,000 in Toronto. So the median income is higher in Edmonton than Toronto. We're floating around $450,000 average price on a house, and they're at 1.1 million in Toronto. Edmonton real estate is to see slower price growth than other cities. Basically, again, that because of the interest rates, there is going to be a bit of a slowdown on price increases. Edmonton is going to feel the effects of that. I wouldn't necessarily say this is anything surprising right now based on what's happened in the first 6.5 months of the year. While Calgary has surpassed already a very strong spring of 2022, Edmonton just continues to have that slow, steady growth, and we'll continue to see what happens over the course of the next 6 months. This was an interesting. This isn't Edmonton specific. This is happening all across the country. Edmonton, the average vacancy for downtown in major cities is floating around 18 to 20%. Edmonton has hit 25%. This is a direct result in something that was talked about a lot during COVID, and now it's happening. The combination of all this new office space that's been built up over the past few years, some beautiful buildings in Ice District. People are moving out of the old buildings, they're moving into the new. And a lot of businesses, because people were working from home, people aren't necessarily coming back to that office space. A variable of things are happening. They're either renewing their leases, taking smaller space because their workforce more lives from home or works from home. Some are moving out to the suburbs. They're citing the concern over safety right now. And if any of you that live in Edmonton have been to downtown Edmonton lately, you'll see that there's a different vibe down there than there is, say, 5 or 6 years ago. So safety is concerned, and then obviously the cost of parking. So we'll see what the city has planned in regards to dealing with this. But again, it's not an Edmonton specific problem. It's happening right across the country. So I'm just going to share this website. Most of you probably should know this website, AirDNA. I first off did want to touch briefly on how rents in general are doing in Edmonton. I don't have any specific stats to share with you. If you want to know stats, I would suggest going and visiting Libertas Property Management in the back corner there. There you go. They can certainly share the specifics of it. But basically, vacancies are down and rents are going up. And I've had a few listings on the market with investors wanting to sell. They couldn't necessarily get their price because the market never really took off the way they wanted to. The interesting thing about investors is they always have that option to take it off the market and rent it out. Unlike a homeowner who pretty much has to sell, an investor always has that option. So I had a couple people make that decision, and they were shocked, not surprised, but shocked at how fast it was to find good quality tenants. And they were also shocked at how much they were able to charge. And so those are my real world examples of basically knowing that despite the stats, I've got people that are experiencing this right now, that the market is doing quite well when it comes to rentals. And usually what follows, and again, we don't know if it's 6 months or 18 months away, is that eventually a lot of renters say, as rents continue to go up, I can't afford these rents, I might as well go buy. So a bunch of renters start to go buy, and that's when you start to see your real estate values go up. Anyways, I did want to bring the attention before I wrap up here about AirDNA as we're talking short-term rentals. This was a great website. I myself had never been to it before, but it had some great statistics on it. I was able to pull up Edmonton specific. It shows that the average daily rate in Edmonton is $93 for a short-term rental. The occupancy rate right now is 63%. You can see how it jumped up last year to 81%, and in January fell down to 43%, and currently it's at 63%. And then the average revenue per month right now is $11.49. So AirDNA, if you ever want to check that out. The one last slide I have is that they can also show you pretty much every property in Edmonton that is in a short-term rental. The purple is by the unit, and the blue is by the room. And I'm looking forward to seeing the rest of the short-term rental presentations this evening. To wrap it up, just in summary, Canadians are feeling the effects of high interest rates. People are still moving to Alberta for jobs and affordability. Inflation is still a concern. The Bank of Canada may still raise rates. And if it feels like confusing times, well, it is. So just recognize that it is confusing times, lean into it. Don't be concerned because it's confusing times. It's confusing for everybody. We have not gone through this for a long time. So if you continue to come to events like this, you will figure out the best course of action for you to be successful in your investing journey. Thanks very much.